Welcome to No Nonsense Nonprofits. Hi, I'm Sandy Ray, founder of Sandra E. Ray CPA, where we alleviate financial headaches so that you can create a bigger impact. Today, I want to talk to you about nonprofit accounting and internal controls. Internal controls are essential for preserving the financial integrity of our organizations. Through implementation of strong measures, consistent assessments, and investment in staff training, we can reduce the risk of loss, we can safeguard our assets, and we can maintain our dedication to transparency. So the first question is, what are internal controls? They are a financial management practice that we systematically use to promote integrity and prevent the misuse or misappropriation of assets of the organization. They also help us to minimize errors and misstatements, and these are written into the company policies and are enforceable. Now, these create a foundation for best practices for our organization. So internal controls can be divided into two categories. First is preventative, pretty self-explanatory. They're set in place to prevent errors, fraud, or theft before they happen. And a perfect example is just to lock money in a safe. That's a preventative control. The second one is detective controls. Now, these controls aim to identify and address any issues that have happened. And a perfect example is our bank reconciliations. We perform these to make sure that all the transactions are recorded and accounted for. And if there's any discrepancies, they can be investigated by the appropriate personnel. So let's talk about the importance of internal controls. They really do help our organizations reduce the risk of any type of loss, whether it be unintentional or intentional. But what many of us may not be aware of is that there is a federal requirement, the Sarbanes-Oxley Act from 2002, that all corporations, including nonprofits, need to follow regarding financial transparency. Now, this act has 11 elements that must be followed by independent CPAs and corporations to ensure financial transparency and creates a trail for all transactions. And then any breach in the procedure could mean that fraud has taken place. One of the things that we see in Sarbanes-Oxley, and the reason you hear it all the time, it's one of the most common internal control procedures, and so I just wanted to highlight it, is separation of duties. Now, simply said, there are two people. One person handles the asset, the other person does the recording of the financial transaction. Two different people. This makes sure that the person handling the asset can't manipulate the recording of the financial transactions to cover it up, or that the person doing the recording can manipulate the financial transactions to take the cash, for example. So I want to talk about internal controls in our board of directors. Really good internal controls comes from the top. So having a board of directors who's really invested in good internal controls is important, but that is really part of their job. A board of directors has a fiduciary responsibility to our organizations, and they have personal liability associated with that office if they fail to exercise their financial duties. So it's really important that the board members understand our internal controls, that they're involved in implementing them and making sure that we're following them. So it's important that the board of directors, maybe on an annual basis, has on their agenda to talk about the internal controls. What's in place? What's working? How have things changed? Do we need to reevaluate? And this really keeps a strong tone at the top and demonstrates to everyone within or outside of our organization that we are committed to transparency. So what can we do to improve our internal controls? One way is to use technology. Technology offers a wide range of solutions, and those solutions can be broken down into different categories. The first one I want to talk about, of course, is our accounting software. Technology can improve our internal controls by automating financial transactions. By automating those transactions, we're reducing the chances of errors and misstatements, and we're providing access to only those authorized users. So it helps us with our separation of duties. Now, if your organization has an internal audit, there is software to help you with that. It will help automate the process. It helps you identify your deficiencies in your systems. It gives you real-time insights into your internal control weaknesses and allowing you to address those issues proactively. Another system is our document management system. Document management systems can be enhanced by improving document management, version control, and access management. They can help us to reduce the risk of loss of important documents and ensure that only authorized personnel have access to important documents. So we can use this technology in conjunction with our record retention policies and make those policies easier to implement. Of course, I want to talk about technology that allows for segregation of duties. There's various types of technology, but we really want to focus on the same employee is not responsible for approving and processing a transaction. And then we have software that provides us with access control. Access control is really critical to our electronic data. It prevents unauthorized access, either internally or externally, and only allows those people who have authorized access to get into our critical systems, our critical data, and our information. Let's talk about implementing these controls. Now I say, okay, we need internal controls. What do we do first? Well, the first thing we do is do an assessment of our risks. Let's look at our organization, evaluate our operations and our resources. This evaluation may identify all kinds of risks, but we may not have the resources to address them all. So what are the most critical risks that we need to address? Obviously, we do those first and we keep going down the list until we run out of resources to address them. Talking about cost-benefit analysis there. Once we've assessed our risk and identified the areas that we want to address, then we can write up a plan and put it in our policies and procedures. This is the things that we're going to be doing as part of our financial management, our record keeping, say budgeting and personnel management, to set these internal control policies and procedures, make sure that followed, that they're implemented properly and consistently enforced. Now, key to implementation of any internal control system is staff training. Our team members are the ones who implement, who carry out, who enforce that these controls are taking place. So we need to train all of our staff members, our volunteers, our board, any crucial member who's coming into this organization who's going to be involved in our systems. They need to understand what their role and responsibility is. They also need to understand the importance of it and make sure that if they see something that's not consistent with their internal control policies, that it's reported to the proper person. So just making sure that everybody's on the same page, establishing expectations, and letting people know what their responsibilities are comes through training our staff. And then finally, we want to be monitoring and evaluating our internal controls. Our organizations aren't static. We're growing, we're changing, and these internal controls need to adapt to that growth and to that change. So like I said before, on a regular basis, we need to look at our processes. What's changed? Do we have more resources now? Can we address more of those items on that list that we couldn't get to before from our risk assessment? Or do we have so many transactions that we've brought in more people to do things and help? And how do we redevelop that segregation of duties? Or how do we bring technology in to help us? So going back and reassessing where we are today, the written policies we have in place and what changes need to take place. And again, once we've established what those changes are, the board approves them, the staff gets trained, we do the whole thing over again next year. So it's just like a living, breathing thing that we need to keep nurturing. So nobody really wants to talk about fraud or misstatements or errors or theft, but it happens. It happens all the time, and it happens in nonprofit organizations just as much as it happens in for-profit organizations, unfortunately. Internal controls can help us to prevent these losses and protect the reputation of our organization, because we live and die by our reputations. By regularly assessing our risks, establishing policies and procedures, and training our staff members, organizations can ensure that your internal controls are effective. So I hope this was helpful. If you have any questions about internal controls or any other topics that you'd like us to discuss, please put that in the comments section. And as always, we appreciate your likes. Thank you for joining me today. And remember that creating a bigger impact starts with stopping the nonsense. If you're dealing with nonsense in your nonprofit organization, we'd love to help you cut through the noise.